Now, everybody ready to talk about accounts payable? I know how exciting that is. We are live! 15 minutes later, we're live. We're live. Greg, that was a very kind of half-assed muscle flex, by the way. I saw that. I wasn't feeling that one at all. You're muted, by the way.
It was more of a stretch than it was a muscle flex. I was like, oh, I'm still waking up.
Yeah.
It was Dennis style.
Yeah, Dennis, he like goes like he's going to do it, but then he just stretches like. I want to see some biceps when we do that.
You have to come back in a few months.
All right, let me log into QuickBooks Online Advanced, and let me just check in on the Facebook feed, see who's watching us from there. Brad says, hey, no Canuck bashing, Seth. And Kelly Hollis says, good morning. I thought the same thing, but at this point I have no idea what that same thing was. But anyway, maybe she also thought that the release party was the Zoom. But no, alas, it was not. And I have some cool stuff planned. I have balloons and things I'm going to be blowing up. You're going to see balloons in the background, and I have like little neon things and party hats, and it's going to be a lot of fun. Anyway, should we just talk about what we're going to talk about later? Kids today. The funny thing is, in classic nerd style, I literally uploaded the last of the videos as recently as this morning. I was like, oops, I got to get this done. And now it's all ready. And sorry, QuickBooks is sending me a code to log in because I cleared my cache, so it has no idea who I am anymore. That's the thing that's so annoying about clearing your cache. I mean, still, we should do it. It's probably a really good idea to clear your cache at least once a week. Does everybody here clear their cache at least once a week? Clear their browser history?
But I have a separate Chrome user for QBO, and that one I clear less frequently.
Right. That's probably a very smart thing to do. Maybe I should do something like that.
That was actually one of the things that we covered on our 97 and Up call earlier this week.
Oh, yeah?
Yeah, was clearing our cookies, and I shared an extension that appears to no longer be listed in the Google Chrome store, but it's still accessible through a couple of different venues, and it just clears the cache and cookies from the page that you're on.
Oh, interesting. So if you just want to get that page out of your history.
Yeah.
Perfect for clearing out that porn site you've been looking at.
Yeah, well, that's what incognito's for.
Excellent. We're covering some really important topics here.
We digress.
All right, just running my trial balance here to see what's going on in my sample company, but I am officially logged in. Brad says I have a separate user too for my apps. Cool. All right, so yeah, this is kind of, this has stuff in it from a video I did earlier this week, which will work just fine. Really, we don't have a whole lot to go through on this, but in the same style that we've been doing, I want to go through some accounts payable related transactions and see how they impact things. You know what? I'm going to switch over to, what was my other sample company? For Hire Incorporated. See, and this also drives me absolutely batty. Oh, I think I renamed it already. You know what? I actually have a project with a list of my custom companies, because you know how we got the 5 for 5 a long time ago? So I've got like 3 of those that I use for sample companies, because might as well use, pay $5 a month for the sample companies. So I've actually, because I frequently go into them and rename them and do things, I have an Airtable project that lists all my sample companies. And this is what the other one is now called. It's called Chart Inc. because of a video I did recently. On Chata.
You can leave the name of the company as your 5 for 5s or whatever.
I know you can distinguish the two, but then what happens is you see how on my screen it shows twice here? And that really upsets my OCD when those are different. It's it's part of the pains of being on the spectrum, Tiffany.
I hear you.
Anyway, so yeah, I know I could just change this company and not this one, but like I said, plus then I forget which one is which, and when I'm going to search, it's a whole mess, Tiffany. My life is very sad. Anyway, I think what I'm going to have to do for the final Zoom is just cut like the whole first 20 minutes and just show the part that we're starting right now. Thank you, Facebook, for the update on everyone's birthdays. All right, so if I go to this trial balance, yeah, I knew this one would be a lot cleaner. Let's run it for all dates just to be sure. Perfect. Perfect, perfect, perfect. So first things first, let's get our bank account set up with some money, right? We'll just record a bank deposit into Continental Bank. That's where John Wick banks, right? That's also the hotel he stays at, apparently. So we'll just put opening balance equity. We'll give them like $500,000 to start off with. That's pretty good. And let's go back to 01/01/19 for the beginning of the year. Save and close. Right? There we go. So now we've got some money. And now that we have some money, we can pay some bills, right? So real simple. We're going to start off entering a bill. Let's pay Acme Inc., right? And if we're paying them for inventory, then we want to use our products or our item details. See, and this is another thing that upsets my OCD. Here we call it items, right? Like we used to do in QuickBooks Desktop, they were called items. Everywhere else in QuickBooks Online, they're called products and services, right? And it's for the average person, it's probably fine. For somebody like me, it makes me want to scream, and it makes me want to stick 9-inch nails through my eyelids. Sometimes. Anyway, so let's get some ammo. We need some ammo for that hit that we're going to do this weekend. Not service, it's inventory. Duh. Ammo for the SKU. Too many M's. M&M. All right. And I always say 0. I never do an initial quantity on hand like that when I'm setting up the item. Sales of product. It's really service income. Let's add a new income account here. We have to be a little subtle in this kind of a business model, right? We'll call it services rendered. I don't know why I'm limited here to just sales of product for the detail type, but I don't care. Oh, probably because I set it up as an inventory part. Duh. Oh, because this is the ammo, not the actual hit. Fine. Sales of product income. And then, of course, on the purchasing side, it should go to cost of goods sold. And the inventory account it's going to is inventory asset. Perfect, right? So when we enter a bill for the purchase of inventory, right, what happens? Oh, it needs the date. 01/01/18. I always put a date way in the past for the as of date, because all you're doing if you don't do that is setting yourself up for some friction later on when you try and enter a bill subsequent to that date. And then QuickBooks says you can't enter a bill for the purchase of inventory prior to that date because the item starting date is after it or something like that. Anyway, save and close. So what happens when we enter a bill like this? We are crediting accounts payable for whatever the full amount of this bill is. Always and forever, right? Accounts payable gets credited this amount, credits increase liabilities, whatever amount lands there, right? The debit is going to whatever inventory account is associated with any inventory parts, right? If it's an inventory part, then on a bill, the debit is going to the inventory account that's associated with the product or service we've listed here. If we use a category, then the debit is simply going to that category. So if we were just booking it directly to cost of goods sold and we put cost of goods sold as the account and then put in the amount, that of course would be the debit. So we credit accounts payable for the full amount of whatever we see here, and the debits would go respectively to the individual items listed, right? Of course, I could split this if I had a reason to, partly in categories and partly in items, right? So let's just say this is for bullets. And I don't know, let's say we spend 15,000, right? We need a lot of bullets. It's a big hit job. Anyway, so when I save this, what we're going to see, and let me duplicate the bill, is all the action is on the balance.
Hold on, Seth. Hold on.
Okay.
You created one bullet at a cost of $15,000.
Oh, you're right. I better fix that.
Bullets.
Right. Thank
All
you
right.
for pointing that out. I'll go back and fix that right now. See, that's why I need you guys here with me. That would be one hell of a bullet, right? It would be a really big bullet. It'd be like a rocket,
Gold,
right?
titanium.
All right. So yeah, we're paying $15 a bullet. I have no idea what bullets cost. I've never bought a bullet in my life. I just want to be clear about this. This is all in fun. I'm not trying to promote violence. I love the John Wick movies. I set up a sample company set based on John Wick, and that is the theme I've been going with on a lot of my sample videos lately, if you've been watching what I've been putting up recently on YouTube. And it's a great use case for demonstrating how inventory works, how services works. It kind of has all the aspects of the different business models that we want to be able to look at. So I just want to...
I think the 15,000 would be like if it were a government contract. That's how much they pay per bullet.
Yeah. What do you think bullets really cost? Like
23 cents for 9mm.
Holy Shannon! It sounds like you have experience.
I own a firearms training company, so yeah, we buy a lot of bullets.
I did not know that. All right. So at 23 cents. Yeah.
So the most expensive ones are the 50 cal. They're about $3.50 to $7 a bullet.
All right. So let's assume John Wick is going to be that kind of a guy, though. Then we'll do $3.50.
Now, if you have to change the quantity to get the 23 cents thing to work.
Well, or you could go like this: 15,000 divided by 3.5. Oh no! What am I doing? I'm really dumb today. Apparently. Sorry. We're going with 350.
Right. They're good.
And then we want 15,000 out of the 350. So 50,000 divided by 3.5. So that gets us to 15,000, but we got a really weird rounding. So let's just call it.
Thank goodness that
If you
not 0.71 of a bullet.
I know. We're just going to buy 5,000 bullets at 350 and spend 17,500, right? We'll keep it real simple.
That exceeds our budget projection.
You know what? We're getting paid very well on this contract, so it's okay. We have room in there. So when I do eventually hit save and close, and I promise you that I will hit save and close before the hour is done. Let's look at our balance sheet. Right, we have the $500,000 that we started off with. This is going to get increased now by 17,500, going once, going twice, going 3 times, right? Because we're adding 17,500 in total to our inventory valuation. And we are going to also see accounts payable pop into this balance sheet. It doesn't show up now because there's nothing using it, right? And that's also going to be $17,500, right? So we're debiting accounts payable for what is now here is a total of $17,500. Crediting accounts payable, sorry, I said it wrong. Thank you, Tiffany. I'm glad I happen to have your thumbnail on the little row on my screen, so I look for your facial cues for confirmation about when I'm screwing something up. So we're crediting accounts payable. Credits increase liabilities. We're crediting accounts payable for $17,500. We are debiting the account that's associated with this product or service for inventory purposes. Remember that when we set this up, when we set up an inventory part, there's 3 accounts. There's the inventory, which is what's used when we purchase it. There is the income account, which is what's used when we sell it. And then there's the cost of goods sold, which is where it goes when we sell it and we remove it at cost from inventory. It goes into whatever cost of goods sold account that we use. And I do have detailed videos on inventory that explains all this a lot slower. So, as promised, before the end of the hour, I'm going to hit save and close. And then we're going to check in on our balance sheet here. Sure enough, 17,500 inventory, 17,500 accounts payable, right? And a really cool thing that I've been doing in this series is after we post the transaction, let's go in here. And because what's really cool about this sort of example is, again, we have a bit of a, for lack of a better word, a disconnect, right? We're not seeing the account that's being used for the debit side very clearly from this transaction, right? But if you run the transaction journal, you will see for sure each and every debit account that was associated with each and every product or service that was used on that bill, right? And so here it is. There's the debit, and here we can see the account is to inventory asset. And if I really want to take this a step further, let's add the product or service column into this report. so that we can actually see the exact product or service we used that's associated with this debit account, right? So we've got our product or service in the form of ammo. Okay, so really quick how I did that again in the gear icon here that refers to the report itself. We just check that off. And if you really want to, like if you hate the fact that it's sticking out here all the way on the right, you can go to Customize and you can change your columns and you can move this up to wherever you feel it belongs and then rerun it. The one thing you can't do with this report really is you can't like memorize it because it's specific to that one transaction, right? So that's my story. All right, so that's the deal, right? We credit accounts payable, we debit inventory asset. If I had more products and services on here, let's see what happens if I have a different line item that goes to the same inventory account, right? So let's go in here and let's add armor. Shannon, how much does a bulletproof vest cost? Oh, Shannon's gone. Great.
No, I'm here.
Oh.
I'm eating. A bulletproof vest costs about $150 unarmored, and a piece of armor costs about another $60.
All right. So sorry, I was just creating my item here. So say that one more time. The cost of the vest itself is how much?
About 110, but I think
and then the armor is another 60
for the front plate. So I think the total cost is about 280. Because you got shipping in there too.
Oh, okay, fair enough. Okay, so we'll call it 300. We'll round up and say it's $300 for a bulletproof vest. All right, so armor. See, I did not know that about you, Shannon. Now I'm gonna have a lot of questions for you to help me with this series I'm doing on John Wick. If John Wick were my client, let's make this expense account cost of goods sold anyway, even though it's not an inventory part, it's a non-inventory part. Doesn't matter. So this is what's getting debited. Since it's non-inventory, there's no inventory account associated with this. This should actually be like equipment, right? It's not inventory. We're not going to sell it. And it's not computer equipment. So we're just going to add equipment. And not quite enough really to depreciate it, right? So we're just going to call this, what are we going to call this? It is expenses. And for this, I don't care. Okay, anyway, we'll just call it equipment. Keep it simple. Save and close. So I'm going to get 2 of these just in case, because if I get shot up once, I'm going to need the spare. I don't want to wait for it to ship, right? I need it right away. And so we said 300 a piece, right? So we got 2 of these. So this is going to go straight to that equipment account that I used as its expense account. And so we're going to debit equipment for $600 on this one. I'll save it. All right, and then let's close it. Nope. Yep. And here's the report updated. So now we have total credit to accounts payable. Again, it's the total of the bill, which is now $18,100, right? $17,500 going to inventory, $600 going straight to the equipment expense account. Right? Let's look at some reports. If I look at my profit and loss, there's my equipment expense for $600. Balance sheet, again, inventory still at $17,500. $18,100 is the accounts payable. And of course, the way this balances is by that negative $600 expense or net income that we now have from the expense closing out here. And this is how we balance, even though now not all of it is on the balance sheet, right? Before it was really clear to see how we balance because the inventory matched the payable and it's zeroed out, right? All right, now let's pay the bill. What was the date of that bill, by the way? It was January 1st because that's when I set up the opening balance entry. Let's change that. Just for posterity. Get it? Posterity. But never mind. I'm so punny. I'm really punny today. All right, so now we're going to pay the bill. Why is it? Well, it's warning me, I guess, because it's past due.
Seth, what is that paid bills directly from QuickBooks?
I believe that is how you can use Bills.com's integration with QuickBooks to pay the bill.
Cool.
You don't have that in Canada?
Nope. We don't have Bills.com or Bill.com.
Oh, that's why.
Yeah.
So they have to get, what is it, Pluto? Or something? What, don't you have, isn't Pluto like the one that does work in Canada?
Yeah, Pluto works in Canada, but it's
Okay.
one of the solutions.
but we don't love it.
We have no
Maybe
comment on it.
text.
Okay, we're being Switzerland here. Sorry.
Yes.
Got it. Okay. Yeah, so if you click this, I believe it. Yeah, see, it takes you right over to /app/bill.com, learn more, blah, blah, blah. And now we're no longer paying the bill and we're exploring apps. And this is how we get sidetracked and lose an hour of our day only to realize we still haven't paid the bill yet. And that's on me. That's the world we live in. Yesterday, I was noticing this. I went to my mobile phone because I wanted to do one very specific thing, but then there were notifications. And those notifications took me on a trip around notification land. And like 20 minutes later, I was like, I went here to do one very quick, simple thing, and I haven't even done that thing. And anyway, that's the world we live in today. It's what we have to get used to. So we'll pay this at the end of February on 2/28/19. We'll check it off. Now, again, debits and credits, we're making a payment. There's a bank account involved, right? So we're crediting the bank account. The journal entry is credit bank account for whatever the total is up here. This is the total that's coming out of the bank account to pay all the bills we end up selecting here. In this case, there's just the one, right? And the debit is going to accounts payable. So with pay bills, the only thing you could change is the account that's being credited, which would be the payment account or the source account, right? The debit is pretty much fixed on accounts payable. You don't really have a choice in the matter. We're paying bills, so it has to go to accounts payable. It would be impossible to change that. So credit this amount, debit accounts payable for this amount, or each and every other amount that you would have here based on, a list of bills you might be paying, right? So when we go here, what's going to happen is we're going to move money on the balance sheet. We're going to reduce cash, and we're going to zero out this payable. This is going to be zero. This is going to be $18,100 less. Who can tell me very quickly, calculating in your head, what the bank account balance is going to be when we subtract $18,100 from $500,000? No calculators, no Google Sheets. You do it in your head. No cheating. You have 10 seconds. Time's up. I have no idea. It hurts my brain to think about that.
418,900.
All right, let's see if Greg's right.
No, 481.
You're exactly right.
No,
481.
I was
That was
dyslexic.
dyslexia. We'll give you a pass on that one, right? There's nothing wrong with being a dyslexic accountant. Perfectly fine.
It's exactly what we do as accountants.
Exactly. We transpose.
We transpose. That's what we do.
Yep. So just as I predicted, we reduce cash and reduce the payable. Everything is still beautifully in balance, right? Now, the other thing that we're going to want to think about is, let's say John gets his bullets and he's like, you know what? These bullets are crap. I should not have paid $350 for these. I want a refund, right? I want to send them back. I want my money back, right? So what do we do? What do we do? We're going to go under vendors, right? And we're going to create a vendor credit. So unlike on the AR side, which we looked at in detail a couple weeks back, we have two possibilities there. We can do a refund receipt or a credit memo, depending on whether or not money is changing hands, right? Remember, refund receipt means we're actually giving a refund. Credit memo means we're just giving a credit. Here, we don't have those kinds of options. We're going to produce a vendor credit. And then if they send us the money back, if they give us the refund, that gets applied to the credit, right? Right, Tiffany? Did I get that right? All right, let's do a vendor credit for Acme. We do have the item details here for the ammo. We're sending back, well, let's assume we can't send back all 1,000. He probably tested a few, right? So we're sending back 900 at $350, wasn't it? Yep. Okay. Save and close. What's going to happen on the balance sheet? We're issuing a vendor credit. So it's going to reduce accounts payable, right? And it should also reduce inventory because it's going to assume we're sending that ammo back. Let's see if I'm right. Save and close. Inventory asset has in fact gone down. Accounts payable is now negative $3,150. Okay. Okay. And then a couple weeks later, we get our refund check from Acme. So what do? I'm going to record a deposit for, it was $31.50, right? Before I forget, let me just get that in here. The account is going to be accounts payable. Okay. This happens around March 12th. So what's going to happen is we're actually debiting cash because we're putting money back into our bank account, right? And we're crediting accounts payable. That credit to accounts payable is going to need to get matched up with the vendor credit, right? So we need to make sure that this goes to Acme Inc. in the received from column, right? In other words, we need to make sure that this Acme Inc., it's their accounts payable that gets associated with this amount, so that the next step is going to be to marry up the credit that we created with the refund that we received here. All right, well, let's save and close. Okay, and notice accounts payable is 0 on the balance sheet, but that doesn't mean it's over just yet. We're going to go pretend like we're paying bills here because it still doesn't see, and let me back up a second and I'll show you a report that kind of confirms what I'm about to show you and why. If I go to my unpaid bills report, it has them both and they zero out, but they're disconnected, right? QuickBooks Online doesn't know that this deposit to Acme's accounts payable goes with this vendor credit. We have to tell it. And there's a couple ways we can do that actually. But the easiest way is to just go pretend like you're paying the bill. And when you check it off, it will find the credit and apply it automatically, right? Which is perfect, but obviously always go slow and double check that that's actually exactly how you want it applied. Sometimes there's just a partial credit or who knows. So always take your time and go slow on those things. 03/12/19 was when we recorded that deposit. So this way, I don't think the date's terribly consequential here, but just again, OCD, spectrum, I like to be consistent. So I'll say save and close. And now notice the unpaid bills gone. We've applied the credit to the charge, so to speak. So now we're truly zeroed out. And another thing I always like to do, especially when I'm getting into anything complex with regard to a vendor and their payables, is after I'm all done, I like to go look them up in the vendor center and just kind of take a peek at the transactions and just make sure it all makes sense, right? Right? So like one thing I'm thinking is, didn't we return most of the inventory and it doesn't seem like this is behaving as such? No, we bought 5,000. I only returned 900. I forgot it was 5,000. I thought it was 1,000. All right. Anyway.
I also usually, when I do an offset credit like that, is I'll put in a different memo because right now you've got it showing up as check number 4.
Oh, good point. So let's go back there and say, so what would you put there?
Offset.
Offset. I like it.
I use apply.
Oh, well, that's weird. Oh, this is the bill payment, which shouldn't matter because it's 0, but it needs something there. Greg, what did you say?
I use apply.
All right, so let's do apply/offset. How's that?
How about offset/apply?
Oh, you want offset for? Okay, well, you know what? We'll prioritize Tiffany's way.
And this is why our meetings always go overtime.
And yes. By the way, let this be no indication of what the Bulletproof Bookkeeping course is like. That one's much more fluid and smooth. I'm just saying.
Because you don't have a Greg and a Tiffany.
No, I don't. Well, I do have a me, but it's a recorded me, and I know people are paying for it, so I make sure that they get their value. Here, we're just here to have fun. This is free. Did I mention last week somebody had posted something on one of my YouTube videos that said so much fluff, and I wrote a reply that said so much free. Anyway, so when it's free, you get the fluff. When you pay for it, there's a lot less fluff. But anyway, so I always go back and just kind of confirm the whole picture of what I've now done, right? I like doing that. In fact, oftentimes, in full disclosure, I usually, if I know I'm going to be doing like a lot of sort of financial surgery on like Acme Inc. and their accounts payable and just the transactions I've had with them, I'll have this open in the first place and I'll have another tab open where I'm doing all the work. Oftentimes when I'm working in QBO, I'll have multiple tabs open, just so I can kind of keep my place in different areas and refresh things and make sure that everything is being handled exactly the way, or showing up, I should say, exactly the way I want and expect it to on the balance sheet and P&L. Years ago, I had done a video that talked about, how to quote unquote manipulate data. Oh, bye, honey. How to quote unquote manipulate data in QuickBooks. And actually, it was a tutorial about how to do it in Excel. And I remember getting some flack from some people on Twitter about how, oh, you shouldn't be manipulating your accounting data. And I was like, well, that's not really what I meant. Like, I get it, but that's not what I meant. Like, people on the interwebs love to take things out of context so they control you. Not control you, but so that they can troll you, right? Anyway, so I've learned over the years to just ignore those people. They're not worth spending any time on. Unless I know I can get a rise out of them and get them commenting on my video, which gets my video better traction and gets my video to show up more in results. And I've had a lot of fun doing that to people. Because usually the people who are trying to get a rise out of you are easy to get a rise out of. So anyway, a little content marketing tip right there. A little bonus tip. Totally unrelated to accounts payable and QuickBooks Online. But that's basically it. I mean, I knew we didn't have a whole lot to cover there. You can drill into accounts payable. And one thing I like to do, in this case, everything's all in the same name. But if you ever want to kind of take a deep dive into what's going on in accounts payable, you can click in from the balance sheet like that and group by name. And then it will do just that. So you can clearly see vendor by vendor what's going on inside the accounts payable account. And then the next thing I always do if I do something like that is let's customize the report. I want my debit and my credit. And then I just move those just in front of the amount. And so now it becomes really clear to see what's going on in the AP account, vendor by vendor, right?
Yeah. You don't even need amount anymore.
No, you don't. But I leave it in there anyway, because sometimes I like to see it like confirmed. I don't know. I used to take it out. Now I actually leave it in. I don't know why. I just like it. I feel like it doesn't cost me any extra to have it there. If I'm sending it to a client, what I'll do is I'll dump this into Excel and I'll rename debit and credit into terms that the client will understand, right? So, because here the debits are reductions to accounts payable. And it's a little bit out of order here because I guess it sorts it first by debit within a day. Actually, it sorts it first by date. How do we have a debit? I know why. Let's go into here. This was my vendor credit that was dated improperly. Again, another good reason to do this kind of review on these things, right? You catch and fix things like this. And again, and this goes actually, all kidding aside, back to the whole bulletproof concept. This is the kind of process I like to apply to get and keep the books bulletproof, because I look at these reports and I ask myself, does this make sense? And if you notice, my out loud thought process really explains exactly what I'm normally doing in my mind, where it's like, wait a minute, something's wrong. How am I starting off negative in accounts payable? And I look back and I'm like, how is the first thing that happened? How could that possibly be a debit to accounts payable? That doesn't make sense, right? The first thing we did was we entered a bill for inventory that totaled, well, inventory plus the non-inventory now, that totaled $18,100. Then we issued the credit, right? Then we paid the $18,100. Then we got the refund, right? Right. Get it? Got it. Good. It is now 8:49 a.m. The course release party is at 5 p.m. Just in case you missed the memo. Greg, I just let a straggler in. I thought you were, didn't I make you a co-host? I think I made you a co-host and forgot to tell you that I was making you a co-host so that you can let people in. Anyway, Carla is now in with us. Shannon says, I'm dyslexic, only with numbers though, not letters. Oh, I'm dyslexic with everything. I'm dyslexic with my toes, I think sometimes. And I trip and fall. I'm kidding.
I think that's called klutz.
I'm being silly. I haven't checked in on the Facebook Live feed yet. Let's see. Cheryl says, I'm watching from Lake of the Pines, California. Nice. Nice. And Brad says, these days it better be a 4-letter word. But now I've lost the context of what that was about. But I'm sure it was really funny. And then Tiffany, you replied to him and said that's literally a 4-letter word. Do you remember what?
He had commented about, you had asked me about
Pluto.
when I was being Switzerland, and he commented.
Oh, Pluto is a 4-letter word up here due to a recent fee increase. Veeam is winning over lots of fans up here. Interesting. Oh, Veeam is the 4-letter word, literally. Got it. Because Pluto is more than 4 letters, right? 2, 4, 6. See, I'm good. I'm good at counting things. I'm really good at counting things. Shannon says this is the one John Wick bought. Ooh, I want to see that. Let me share my screen again. That's hilarious. I'm really glad I chose John Wick as my theme and that we have Shannon to help clarify. So he did pay $300 for this, or would have.
Now, Seth, on with your inventory thing, what I typically do is when I set up an inventory item, is I'll set up the standard cost in that as well, so that when I use it on an item on a transaction, that I can see that I was expecting like a standard cost of $300 and it came in at $550 or something, and then I would be having a question.
Excellent point. Excellent point. All right, so where did that go? So the ammo, we would edit this, and the standard cost we said was $350, right? Save and close.
And I will actually pre-populate my sales price as well.
All right, let's go back and do
just
that.
to make it easy so I don't have to keep thinking.
Well, but in this case, we're not actually selling the ammo. We're buying it to use it, but we want to keep it in inventory so we know how much we have left, right?
But don't you want to have it as an item that you would be billing him for, or is it just a flat fee?
Well, no, I'm doing John's books, right? So John's buying the ammo, and then he's using it. He's never going to...
He's got to charge somebody for doing the job.
Oh, that's true, but he charges...
He's going to use it, so then you're going to use it for job costing.
But contracts like this are usually flat fee. You know, so
that's what I was asking.
Cost of inventory is always included. Yeah.
Okay.
But to that point, we have to still deplete the inventory somehow, right? So now we're getting off of accounts payable and into the inventory model, which is fine. I should probably add a thing on inventory to this whole series anyway on how to.
But that would go in as FIFO anyway, right?
It does go in technically as FIFO. In this case, that wouldn't matter because it's all in at the same cost.
Right.
But the way to deplete the inventory, the easiest way, is we can
FIFO is first in, first out for those who don't know.
Yeah, for anybody, for the kids at home who are, and don't try this at home. Definitely don't try this at home.
No, try it at home. That's why you're taking the course.
Oh, well, there's that, but I'm talking about like buying bulletproof vests and bullets.
Oh, yeah,
that part, don't try it.
Yeah.
Anyway,
Don't do a hit at home.
if I come back from doing a hit, and let's say it was like, you know, like a long range job where I really only needed one bullet, right? So here's what I would do. Ammo. We're going to use up 1, and we're going to sell it for 0. Right? So recording a $0 sales receipt where that's all we're doing is we're selling 1 bullet for 0. It's going to take the cost of that 1 bullet out of inventory, stick it in cost of goods sold, and we're done, right? So this would be like,
set up a customer in that case for depletion or
yeah, that's probably a
or...
really good idea. So inventory depletion. You could also bill that customer directly who hired you for this, but that could get cumbersome to, you know, but maybe not, because theoretically you come back from a job, you'd count up, you do an inventory count to see what you've got left. But if you had a lot of jobs going on at once, then this would start to get hard to track, right? But anyway, so you can set up a customer called inventory depletion. If I save this, then we can go look at the journal entry and see what it did. So there's no income, right? What's interesting is it's showing, there's no impact on the bank account, right? The sales receipt normally would have a debit to the bank account, but nothing happening there because we're selling the inventory for 0. But here we got our cost of goods sold increased, debits increased, cost of goods sold for $350, and we reduced our inventory asset for the $350, the cost of 1 bullet, right? So that's how you do your inventory depletion on something like this, where you're buying the inventory, you're buying something and tracking it in inventory, but it's for your own use. right? It's not getting resold, not directly anyway, like we talked about a minute ago, where your contracts are flat fee, but you still need to keep inventory up to date. So you come back from the job, you look at how much inventory we've got left, and we book a sales receipt for $0. We basically sell it for zero just to get the inventory cost out of inventory and into cost of goods sold. And actually, going back to your point, Greg, if we want true job costing, then we would put the actual customer here. When we do this and we record one of these for each customer, then I can do job costing and see a P&L by customer to see here's what we charged, and then we can see the inventory cost on that job, right? But there's a balance here because that can be very cumbersome to keep track of depending on the actual nature of your business and how much of that kind of tracking would be needed. And then it's always a question, and I have this conversation a lot when I talk to business owners and we're doing our kind of one-on-one sessions and we're trying to set up the right systems and workflows for these sorts of things. And I'll ask them, and this is an important question to consider, is whether or not the extra time, and let's face it, time is our most valuable resource, is the extra time we're going to spend doing that tracking going to provide enough value to make it worthwhile to do, right? If we do kind of a high-end service where it's low volume, then it's easy enough probably to track and record something like this customer by customer, right? But if we're doing a high volume of transactions, then it's probably going to, at a certain point, it's not worth doing all the work to keep track of that, right? That's the question that has to be considered when, or that I ask my clients to consider when we talk about this. Because even if they're asking me to do it for them, guess what? If you want me to pay that kind of attention to your accounting, that at that level of depth and detail, and if it's high volume, there's a cost associated with that. If you're paying me to do it, you're going to pay me more to do that. If you come back and say, you know what, I don't need to track all the cost of my one inventory depletion cost center, I don't necessarily need to track that by customer, right? So again, it's a balance. At what point is it no longer worthwhile to go to the effort and the time and use up the resources necessary to get that kind of tracking?
And what sort of implications does that also have on, like you said, this is a hit contract, so it's a lump sum contract. At what point does it have implications on the sales tax side?
So here I would pay in California would be use tax, right? So first of all, the easy thing to do would be just pay the sales taxes when you buy it, and then you're done because you're buying it, paying the sales taxes. The sales taxes have all been paid. Now you're just using it up, just like anything else you buy. That's for your own consumption. But if what we're talking about, Greg, is sometimes we buy inventory where some of it might get resold and some of it might get used by us, right? In that case, you have to track it very carefully and say, all right, the stuff that's used by us, first of all, the question again is, did we pay the sales taxes when we bought it? Or did we present some kind of a reseller's license to the vendor so that they didn't charge us the sales tax, right? If they didn't,
go ahead, finish.
If they didn't charge us the sales tax and we used all the inventory, like in this example here, then we would have to file the sales tax return as use tax, meaning we used it, so now we pay the taxes on it. If it's kind of a hybrid and we didn't pay the sales tax, then whatever we sold to customers, right, and especially if we charge them, well, whether or not we charge a markup doesn't matter. If we didn't pay the sales taxes to begin with, when we sell it to the customers, we collect all the sales tax and pay it in. Now, if we paid the sales taxes and then we mark it up and charge our customers for it, now what we do is the sales taxes we paid go as a credit against the sales taxes we collect, because on the markup, the sales taxes are going to be something higher than what we paid on the same inventory. So we basically have to pay in the difference. And that's where it gets really tricky and convoluted. So my thing in those kinds of cases, because I'm a very lazy accountant and I don't want to have to do a lot of work, is to say just pay the sales taxes.
So I have a specific situation where a client buys product and they pay sales tax, and they're typically using the product in installations, and it's lump sum contract, easy peasy, no problem. No sales tax is collected on the sale. He's got a specific scenario where he's bought 3 or 4 major pieces of equipment paid sales tax on it, but now he just wants to sell those items with no install or anything else. So he's just specifically selling for pumps or whatever it is.
So
Where
this
does
is not the
live?
normal use case, which means I assume he hasn't got an account with the California Department of Taxation and whatever else
Correct.
it's called now.
And he doesn't want to, but he
Right.
wants to do it as legit as possible.
So here's what I've done, and what's great about, and this is obviously different state by state or province by province, depending where you are, right? See, I've got my Canadian friends covered. What I've done is actually I've called this, it's just so much easier to say State Board of Equalization. And I got so used to saying that for so many years. They changed the name. For those of you who don't know California stuff, we used to pay sales taxes to the State Board of Equalization. A couple years ago, they changed it. It's now called the CDTFA, which stands for the California Department of Taxation and Finance Administration.
Tax administration.
Yeah. Anyway, you can call them and you can anonymously describe your scenario, and they'll tell you exactly how to handle it the right way. Unfortunately, they might tell you you have to now create an account so that you can file and collect and pay the sales taxes, and then the account will just go inactive again if this doesn't start happening on a regular basis. Because technically, he needs to pay the sales taxes on that.
Well, he needs to pay the sales tax on the markup.
Yeah. Yep.
Seth, just to simplify your original, and I'm kind of backing up before the sales tax conversation, where you had to do the use of the bullets.
Mm-hmm.
What you could do is you could actually set up a bundle sale for the hit and include the bullets at whatever your standard usage is, and then hide that bundle so it's not showing as a detailed item on the sales receipt.
That's
and
true.
And then just
reconcile that with
and
actual
then go in and
usage,
change
yeah.
the quantity on actual usage.
That's true. And if he's really good and he's doing, like a long range, like where he's on a rooftop, it should only be like one bullet per job anyway, right?
Right. So then that way you could set up your standard in your bundle, and then that way you know whether you've got overusage or underusage. And it also kind of gives you a head up on your bookkeeping.
And again, I want to make it.
The long range bullets cost a lot more than $3.50.
Oh, that's a good point. Thank you, Shannon. Shannon's my official consultant on this stuff now. And again,
well,
I want to
you
make.
bought the long range because you paid $3.50, and Shannon was saying they were only 23 cents for the regular bullets.
Well, she said there were kinds of bullets that got up that high, though.
Oh, okay.
The 50 cal, which is way bigger than most hitmen are going to use 9mm or 22,
This is so
which
funny.
are 6 to 8 cents and 23 to 40 cents a bullet.
Yep, and I just want to remind everybody that we do not endorse violence. This is all just for fun and for educational purposes, right? Imagine somebody comes back and says, well, I was watching this accountant show and I got, inspired to go buy bullets. And anyway, let's not go there. So we don't endorse violence or any of this, but Shannon's my official consultant now for my John Wick videos. So that, again, this is just for fun and for play. If John Wick were my client, here's how we would do the accounting for him. And on that note, we are out of time, but please, please, please don't forget to join me at 5 p.m. Eastern, 8 p.m. Pacific.
No,
and if you're somewhere
other way around.
No, 5 p.m. Pacific. Oh, I did say I'm dyslexic. 5 p.m. Pacific, 8 p.m. Eastern. I totally said it backwards. I said 5 p.m. Eastern and 8 p.m. Pacific. That wouldn't even work.
I was going to ask you if Gina was okay with that.
Yeah. 5 p.m. Pacific, 8 p.m. Eastern. If you live somewhere in between those time zones, I have no idea at this point. With the clock changes and some places do daylight savings and some places don't. I have no clue. Just look it up. Just Google it. Go on your calendar or just Google what time is, if it's 5 p.m. Pacific, what time is that here? I bet you if you put that in a Google search, you'll get a good answer. Right? Google is really good like that. Anyway.
Or just math.
What?
Or just math.
Yeah. Well, but again, I don't know what the math is. Do I add 2 hours? Do I add 1 hour? Because like I said, it's all different depending.
Depends on the time zone. You add 1 or 2 or 3.
Yeah.
If you're staying within North America.
But no, there are some time zones, like when we go one time zone removed from where we are in Pacific, where depending on what time of year it is, I think some places in Arizona, they don't actually do daylight savings. So sometimes of the year it's only 1 hour, other times it's 2. So that's where it gets.
I think it's the entire state of Arizona, and that is the only place that I know of that doesn't participate.
And they
Caribbean
actually,
doesn't either.
and that's a real gun-toting state too, isn't it? I mean, not that that has anything to do with daylight savings, but
And Hawaii,
Trisha's
too.
Hawaii too.
You know that we actually voted to get rid of it here in California.
And
We
they
did?
didn't listen?
It's going to go away.
Hmm.
Really?
It has
When?
to be approved by Congress, but
It would make sense. Because the
Yeah,
whole purpose
daylight
of it was
savings-
for farming. How much farming are we
Yeah.
doing anymore?
No, the
well,
other
in
reason
California,
though,
a lot.
the other reason for doing it is the Department of Energy has done studies that they feel, and that's why, by the way, they've changed the date, the points in the year at which we do it, is that by adjusting the time and based on the lighting, the hours of light and the hours of dark, that the Department of Energy is trying to minimize the use of energy and resources. Theoretically, what they're trying to say is we'll need less heat in the winter and less AC in the summer based on this somehow. I don't know.
Hmm.
It's
I have no idea. Why everybody is go buy LED bulbs and then the Department of Energy can shut up.
That's
I'm
true.
just kidding.
Although you can't heat yourself with that.
No,
That's true also. But you can get
but it will
warm
cut
blankets.
down on your air conditioner consumption.
Yeah. Anyway, this has been a fun broadcast. We've talked about a lot of things.
Oh.
And we did include the accounts payable process somewhere in there. We covered it, right?
And we
got
had
it-
a good talk about inventory too.
Yeah, we got some inventory stuff done. But I think I'm going to add that to the series. We're going to do a whole one dedicated just to inventory. I think
Might
that'll
have
be
to.
really, really useful. So I'm going to add that in today. I'm going to have to rearrange some of the ones that I had already gotten planned here. But I like it. We're actually coming up at the end of this month, by the way. We're going to do scary bookkeeping stories again. We used to do that years ago. So on October 25th, which is the last Friday before Halloween, we're going to do scary bookkeeping stories. So come prepared to share stories, names withheld, of course, about some of the scary things that your clients do with their bookkeeping.
I guess another takeaway from this video is that if you had John Wick as a client, you certainly would not want him unhappy with you, right?
Absolutely. You better provide him with a really good service, right? And although John Wick, even though he's a hitman, seems to be a principled hitman. You know, he doesn't like kill gratuitously. He only kills bad people. And, you know,
Or
anyway,
accounts he doesn't like.
maybe. And the main thing is,
Never know.
the main thing with John Wick is just don't mess with his dog, right? That's how it all started. It all started because somebody came in and killed his dog. So don't mess with his dog. Bye.